is an art and there is something nostalgic about sports. That's actually why fans argue.
Paul Rabil, step down, scores!
We got the lacrosse god, Paul Rabil.
So if you look at compound annual returns on those investments, it's like 15%, which means on average in the last 35 years, your investment has 50 to 100x. 50 to 100x. The lacrosse god. Can we reshoot that intro?
Come on, that's good, man.
Today on Portfolio Players, I sit down with Paul Rabil. Paul left Major League Lacrosse, where he was a star, in 2018 to start his own rival league, the PLL, Premier Lacrosse League, and just 2 years later, his league swallowed up MLL. PLL has since launched a women's version of the league. We talk about his approach to growing the league, his approach to media deals with the likes of ESPN, and how to bring new fans to lacrosse.
Okay, welcome back to Portfolio Players, presented by E-Trade from Morgan Stanley. I'm Dan Roberts here at Front Office Sports in New York, and today we got the lacrosse god, Paul Rabil of Premier Lacrosse.
I was wondering how you're going to gas me up. The lacrosse god. Can we reshoot that intro?
Come on, that's good, man. No, I mean, look, like let's get into it and starting your own league. Like you and I have been chatting for years and years.
Yeah.
I mean, I talked to
over
you,
10 years.
Yeah, I talked to you when you were first. You had just left MLL to start PLL.
No, even before that. You talked to me when I was at MLL. We should probably pull this interview. You're at Yahoo, and you were asking me how professional lacrosse could work, and I was talking about it through the lens of the MLL. I actually
because you were being diplomatic, probably.
I don't know. I have to look back. If it was like 2017, maybe we were beginning to think it through.
Yeah.
But earlier than the mid part of 2017, no.
Even some that follow lacrosse when they're in college might not even know that there is Major League Lacrosse. How can we make that league bigger? How do you make it more prominent? Does it ever frustrate you how it isn't really that well known still?
Yeah, I think it's interesting. It's a really great question. I still get hit with it all the time. I didn't know there was pro lacrosse, and people that ask me that are pretty sensitive. I'm like, it's okay. Part of my job is to educate and let people know that.
No, I mean, our strategy would have been unequivocally, if MLL was working, to raise capital and buy a team, like someone might pursue in the NBA or the NFL.
Right. And I think, this is painting with a very broad brush, but sometimes when we talk about PLL or talk about you, to a non-lacrosse fan or someone who hasn't been following all this, I just say, well, picture this, the best, or you would maybe be humble and say one of the best, say the best lacrosse player in really the only pro lacrosse league leaves to start his own rival league, and in a matter of a few years subsumes the prior league.
Yeah.
That's quite a story.
That's what happens. I think the real juice, though, is what we did differently, because if that happened in, women's or men's basketball or soccer or whatever, likely because of the scale of those sports and their team sports, you would relaunch a better mousetrap, which would be an association and finding owners to run your teams. So we built arguably the first successful team-based touring model. And it's wholly owned single entity still. And we've expanded teams and we've added the WLL. And we fully verticalized the opportunity where we have a big youth sports business and the professional business and everything in between that makes these things operating companies. There are disadvantages to not having a Jerry Jones or a Robert Kraft owning your team and owning teams and investing into those markets and building the direct connection with New England fans and Texas fans. And I want to get there at some point. But looking at our weight class pound for pound to the other established sports in America, we needed to do something different. Otherwise, we'd have just repeated what had been done for 20 plus years in MLL and wound up in the same place.
Well, you're doing my job for me a little bit with segues, because it's Portfolio Players, and we talk to people on this series with a portfolio, and what keeps coming up is just that everyone wants to be an owner now. Everyone, whether they are a former player, current player, never played, but are a media person, like everyone wants to own a piece of a sports team. And then I like to say any sports team.
Yeah.
I mean, that's why we hear about pickleball. And now there's a new racket or paddle sport called Tiptee that we wrote about, or a wiffle ball league that Gary Vaynerchuk is pumping. Like everyone wants to say, well, I own these teams. And as a result, you look at PLL, and it's almost surprising that you haven't yet done that, because I'm sure that you would have people knocking down the door to own teams.
There's a couple of things we want to talk about. So bring me back to why people are investing in sports, because I'll forget. But to answer your latter question is, and tied to what I was just saying, we're touring and we're wholly owned, so we could grow the business faster, create competitive equality, and try to leverage a smaller audience to get all of the best players like an individual sport would in one market over a weekend, activating sponsors, all that stuff works. But we do two things that are advantageous to what other team sports can't do as an association. The first is we book our schedule with our network partner before we create our matchup schedule. And so typically in the NFL, the NBA, or others, they have their owners submit schedules. The commissioner's office goes through them. They go through a few iterations, and then they get the schedule, and then they go to the network partners. Thing is, with networks, they often book programming 12 to 18 months in advance. And then if you, again, understand your weight class, and looking at MLL, because they did this, they build their schedule, then they go to their network partner, and they go, no availability. So because we control the whole thing, we went to NBC first 7 years ago with this model, now with ESPN, now entering our second partnership contract term with ESPN, and say, what do you have available? And they give us their ABC windows, they give us their ESPN, ESPN2, Saturdays, Sundays, Friday nights, and we go, cool, we'll take all of them. I mean, I'm being hyperbolic, but we take as much as it makes sense, and then we build our schedule around it. You can only do that in a touring model, and it's strange as a team sports league to tour, but that was important to get right, because up to that point, no network had ever paid professional lacrosse to distribute its games. And then point two is sponsorship is fragmented in professional sports, and a lot of brands pay more than they would like to access the big four leagues, to come in at the league level for IP, usually at the team level, then with the association of the players or directly through the agency of a player. Then you have to hire a production house and work in tow with an editorial arm to bring it all to life. It's fucking expensive.
Yeah.
So when you're wholly owned and you control the 360 experience from league IP, team IP, access to marketing for the players, on-site activations. We actually have a buyback program with our network partner that we started with NBC. Now we have with ESPN. It's really successful, where we just like sell ads in advance before even upfronts, because our partners get to come in and get access to games and be a part of the experience, which shows as a sponsor, your conversion rate is higher when you connect your adverts with the program that's live on television for a fan. And then ESPN will sell what they have. But it's a partnership, and it's different than a lot of media deals. So that's why we tour. And then to answer your question, when we sell teams, you basically have to do the math around continued revenue growth that we've generated in this model, existing model, data around fan participation and just wider fandom on a market-to-market basis. Then you can actually go out and auction teams at a fair and increased value than we would have in year one without any revenue and sparse data. So we've played the game of patience, which required great investors from Joe Tsai to Arctos to Chernin to Rain, and they knew this process along. So when we do sell teams, we will be in a better position than had we done it formally.
I noticed you say when, not if.
Yeah, because if we really want to become a top 5 team sports league in North America, you've got to have team owners who, I think the right ones are force multipliers. They create more value in some cases than the league does. I mentioned Jerry Jones and Robert Kraft. They've done amazing things for the NFL, and Roger Goodell is one of the greatest commissioners in multiple lifetimes. Take Angel City when they launched in the NWSL. Right. So if you get the right ownership groups and even the right ownership model, I like what Inter Miami's done, where you have a capital allocator, take Aries, you have a star like David Beckham, and then you have an operator like Jorge Mas. And you put the three together, and I think that's how we're looking at when we do pursue that path. What we also get to do is when we sell teams, you shift the model from touring to home and away, because you're not going to want to come in and buy a team and only get 1 or 2 game weekends. You're going to want to have 8 to 12. So you can sell more tickets, merchandise, local sponsorship, etc.
It's funny you mention all of the PE backers, and I wanted to ask about that. I mean, your origins in starting PLL, you have had, call them angels, even if they're not technically angel investors, although some are, but really these backers who believe in lacrosse.
Yeah.
And obviously that helped. In some cases they played. There's Joe Tsai, obviously, and there's Kraft. Belichick has been a great mentor to you. Then there's all the PE groups. And now the trend in the last few years is PE rushing into other sports in which they hadn't been previously, or at least they hadn't been so explicitly.
Well, they couldn't either.
Yeah. I mean, well, you had sort of the connections, the 6 degrees of separation stuff. But now it's like NFL opening its doors to funds. And
Exactly.
I still think there's a lot of misunderstandings there with, it really is still only a list of 5, but
Right.
You can get funds within the funds. And there's a lot of hue and cry, I think, over private equity in sports. Meanwhile, they've been here for years, but people saying like, oh no, this is the beginning of, they're going to ruin everything. That's what PE does. Obviously for you, it's been pivotal and foundational to have those partners.
Yeah, I think, speaking of Roger Goodell and Adam Silver, they're doing a great job of stewarding this modern investing landscape to provide liquidity opportunity, because we can probably back our way into why owning pro sports teams is a great investment. And there's like two sides of the coin, though. One is scarcity as a primary driver, among others. And the other is, well, if scarcity is true, and there's one in, one out, when are you actually getting liquidity? I mean, the Celtics at times were losing $70-80 million a year, and then they sold for $6.1 billion, and it's going to probably blend up to $7 billion based on the next 51%. But what? So you actually have to have patient capital that knows how to continue to invest, but sees the exit case. But then when do you exit? Well, some people don't. And so then you go, so liquidity comes through, whether it's the Patriots or others, but going back to the commissioner has done a really good job of capping the percentage of team ownership, including voting rights and decision-making authority, and then designating uses of proceeds. So I think I've done a great job. Now, we don't have to do that because we're wholly owned. When we break off and sell teams, hopefully we're not in the position that MLS was when Phil Antrowitz owned the majority of the teams at one point, and then they had to figure out a way for him to sell off teams as the league got to 14, 16 total. Because that's a conflict of interest. If you own several teams and you want to compete for an MLS Cup, well, make some trades toward the end of the deadline and stack your one team. Right. So, I mean, people know that. But zooming out around why sports are interesting, I often use this example. We think about year to date our business, but I think about calling out 1990 to today in the NFL and the NBA, and then comparing it to other investments across the capital markets. And so, NBA teams in the early 90s were trading for like 70 to 80 million each. Denver Outlaws, maybe we'll get the Denver Outlaws to 70 or 80 million. Who else? It was Denver and another team traded for about 70, 80 million in the NBA. Now we see the average value of the NBA franchises. In the NFL, Jerry Jones in the late 80s was 140 million.
Yeah, sounds right.
Bought the Cowboys. So if you look at compound annual returns on those investments, it's like 15%, which means on average in the last 35 years, your investment has 50 to 100x'd. 50 to 100x'd.
You just got to wait. I mean, you got to have a long outlook.
Look at the stock market.
Yeah.
Stock market, 10, 11% since 1990 compound return, so close. But if you amortize that out over the 35-year period, that's a 15x return. Stock market, patient capital, Warren Buffett, compound returns, compound interest, go, go, go. But if you look at the difference between the two and why capital markets are shifting over to sport, that's partially the reason. I mean, it's a 50x return versus a 15x. And then what I think predicatively is exciting about sports, it's AI proof. And that, as I can speak to myself as a lacrosse player, I can prompt and I use my agents well. I have McKinsey at my hip. All right. If I prompt, I can probably come up with a clever, shooting workout from Gary Gate and a training session from Arnold Schwarzenegger to build out my shoulders. But I still have to do it. And that skill only happens from physical activity as an athlete every single day to acquire skills such that when the point comes of appointment watching television and the professionals are on or the Olympics are on and we're all tuning in because of that scarcity element, because we're like, holy shit, this is the best at what they do. They're tied to my community or they're tied to my country's pride. I'm watching them only because they had to do the fucking work. And that makes it AI proof. Part two is, look, there'll be a robot that, and it probably already has, it gets to mid-court and hits 100 threes at a time.
I was just about to say,
that'll go viral. And then it won't because people will know it's going to hit 100 threes in a row. Part of what makes sports great is failure. When someone goes viral for a poster, there's someone who is so upset at home logging off of social because they just got dunked on. You have to have failure. And an AI is largely across industries meant to mitigate. And there's all the efficiency stuff. So you still benefit as an organization from the AI efficiencies and the expansiveness that it can bring to the table. But as a property, that's where long-term betting is coming in because you want analog event experiences, live IP.
If we get into betting, this will be a completely separate,
it'd be
major road to go down.
It'd be separate, but I still think that smaller picture, bigger picture is just, what are people going to desire as AI continues to proliferate? And it's community experiences, it's sports, it's concerts.
And I think human beings excelling at the sport is totally true. I mean, you say AI proof. We had Alexis Ohanian in here and we were arguing about whether every sport will go to AI line judges and umps. And he says yes. And I said, I still think there's sort of a charm to the human element of sometimes they get it wrong. And he said, but why would you ever want them to get it wrong? All that said, we at least agreed no one wants to watch bots play the sport.
Dude, it's a great, unless they're into e-games. But there's which artificial intelligence, I was introduced to that when I was 18 playing FIFA. And sending my forward on a run where I could hit him with a through ball. And
the machine knows.
Yeah, it was like R2 triangle sending him on his run. Anyway, I would like to listen back to that interview you had because I do think there is one of my favorite executives in media, and if you've read his book, it's called Who Knew? It's Barry Diller. I've never met him, but he's had such an extraordinary career. And I reference him because he is more than certainly most of his peer group. I can't say it definitively all. He is an adapter and an adopter of new tech and always has been. As the chairman of Paramount, however many years ago, saw the future in television, saw the future in online shopping on television, and then saw the future in technology.
Online dating.
Yeah.
IAC.
But he always says you have to operate with instinct first. And that's what I love about your example that you shared with him, is there is an art and there is something nostalgic about sports. And if you rid it quickly, if you rid the canvas with all that to be right, that's actually why fans argue. Like, was that an interception or was that a catch? Whatever conference final game that was. And I was scrolling through X and seeing all the dialogue about it. And that's good. I'm watching a little bit of the FA Cup right now and they don't have VAR and they've kept that. And it's kind of cool, even if the refs get it wrong.
Yeah.
So,
because it's human. If we go back to sports as an asset class and everyone investing in it, and you're talking about, compound growth, and it's just very obviously a great investment across the board. But is there another reason why right now everyone, especially recently retired or even current still playing athletes, wants to be an owner in sports? You could throw in celebrities. I mean, Will Ferrell and Natalie Portman, actors. I
mean, I think an athlete wanting to be an owner in a sports team or a league makes as much sense to me as an actor wanting to become a studio executive or own their own production company. They're domain experts. and they have these unfair advantages, especially like we could talk about how valuable sports leagues and teams are, but you really have to win. The economics, historically, are so favorable when the team's winning, from ticket sales to sponsorship, viewership, etc. The other piece is we can't forget how important it is. All of this ties together for the tier 1 properties of any given discipline. And
premium.
I see a lot of kind of gold rush mentality to, like, you had mentioned it, start new leagues of different disciplines.
I want to ask about that.
Start tier 2, 3, 4. I mean, I love Don Garber. He's been a mentor in a lot of ways, and he's had to do so much, knowing and explicitly articulating that in many cases, in some cases, they're the 3rd or 4th most watched soccer league in America, not just globally. And then they bounce up and down, but that's to see what he's done to the MLS and team values and structurally. Not being the English Premier League, which is undoubtedly, I think, the best league in the world at the moment, is extraordinary. Assume you're not the MLS and you don't have Don Garber. If you are a tier 2 or 3 property, it's more likely than not, even if you figured it out in the near term, like TGL or Unrivaled, that you can share the best talent. Assume at some point you're not, because the tier 1 properties are going to want to keep and protect their talent. I don't want them getting injured as the WNBA is considering paying their players, $250K and north of $1 million on the high end. Then all of a sudden they're playing in Unrivaled and tearing their ACL.
That's the risk.
You don't want that. So if you don't have the best players, you're not the tier 1 property, which strips you of the value that we've talked about in multiple scarcity, of appointment watching television, which basically means you can be an advertising product, and different than, why people get upset when there's advertising across a film or a television show now that's on streaming, or even the creator economy, is you have to wedge those in. You have to do this pre-roll, mid-roll, post-roll, and it's unorthodox and it is decidedly disruptive. Where in sports, they're built in. We have quarter breaks, timeouts, challenge flags. In the NFL, they play for 4 seconds every 35. So like and fans actually, by the data, enjoy the ads. They do.
The Super Bowl had bad ads, by the way.
Well,
they were not good.
That's whether you think you like them or not. Yeah. But we all were like, let's watch these ads. I mean, do you want the Super Bowl without ads?
It's an interesting hypothetical. I mean, you need the break too.
Yeah, dude, we explored it.
A little bit of a break.
When I mentioned we were in year 1 with NBC, this was before they launched Peacock. So they had NBC Gold, which was actually really lucky at the time, because that was a product that they had rolled out specific to each of the properties that they had. So we got access to all that data, because anyone who came into NBC Sports Gold for the PLL, we knew who they were. Where today, it's hard to attribute people coming into Peacock or people coming into ESPN, the app, for us, or college lacrosse or the NBA, right? So we had access to all this data, but at the time, streaming live sports was still novel. This was 2019. So we were like, let's stay in the huddles at timeouts. Fans are going to want that. They just paid $50 for the season. They don't want to go see an ad. And then our fans are like, no, man, we're bored.
Wow.
Like, it's a huddle. It's like, I reference that in, in storytelling in business. Like, people want access to the boardroom, but then you actually get there and you're like,
yeah, right.
This is dry.
Yes. Yes.
It's kind of the huddle.
100%. Although I do love now that increasingly in baseball, they give you picture in picture and you're seeing the ad, but you're still seeing the baseball.
That's dynamic advertising.
They got to cut away. Yeah, it's great.
2-box ads.
Let's stick with media and TV. I mean, we talked about the key supporters that you had on the financial side. On the TV side, someone like Burke Magnus at ESPN has been a real champion for you guys.
Burke's been a champion of lacrosse for 28 years. He was a part of the team that structured and continues to help advise on the structuring of college lacrosse in the NCAA Final Four and ACC Network, things like that. He was the president of programming when we did our first deal with them in 2022. And yeah, just a steward of the game, but he's also not giving out any favors. Numbers have supported college lacrosse to the tune of the investment that ESPN had given it. And, there was a story to be told around what we could do based on those numbers to grow professional leagues with all the marketing tactics and strategies and deployment of capital that we had in place. So he was really smart about that, understood where we were going. And then he's now shifted to the content side of the business, and Roz Durant now runs programming. And Roz has been amazing. So we did our second deal with Roz. But what we've gotten unlocked with Burke now is, the way that ESPN is divided between programming and content is their shows and their originals, and the production is on the content side. So having an advocate or someone who gets it over there has been really important.
How key is it to have those people have played lacrosse themselves? In other words, it feels like even more than with other sports, you can get NFL and NBA without having played football and basketball.
Yeah.
But then there are sports like lacrosse, volleyball, field hockey on ACC Network. I'd even put tennis and golf in there, where the biggest fans of the pro sports probably also play it themselves.
Well, we wouldn't have Sail GP without Larry Ellison's obsession with sailing. We wouldn't have the UFC without Dana White and the Fertittas loving mixed martial arts. List goes on. Joe Tsai, who's our biggest investor, played college lacrosse at Yale, played in high school at Lawrenceville when he first came over to the U.S. He has a special connected story to the game. So you need that. Whether it's on the sponsorship side, the network side, the investor front. Lacrosse is a complicated game. I often reference the NBA and the NFL because those are the big two. And I love what Adam, by way of example, has done. But we're probably on a trajectory more like the NHL if you think about our product, which requires upfront capital unless you have a 501c or a public school offering to give you equipment and helmets, which, by the way, is a major differentiator for American football, is that sport's actually expensive to play, but we all got our pads for free because of municipality funding on a state and national level that dated back to the 60s. So otherwise, you have to pay for your equipment. And at the youth level where participation begins, you want to fall in love with something before you try to invest. You don't want to invest and see. And that's hockey, that's lacrosse, that's golf, except we don't have to pay for ice time or green fees. But it's still a step or multiple steps you have to take to start. And then if you're not familiar with it, it's not easy to follow on TV. The ball's small.
Or the puck. That's why the hockey analogy works.
Small, and you have boards. In baseball, the ball's small, and golf's the ball's small, but you have a starting point every single play. So all the cameras know the mound is where the action's going to begin. They give you 5 angles. It goes across the plate. There's knowns. Golf, same thing. And then they figured out
They now illustrate it for you anyway.
But it's really just a story because we don't actually see the ball flight like we do when we're at a golf match. So they tell you starting block is on the tee or somewhere in the fairway. We're going to show you the ball in the air.
Yeah.
It's just a ball in a blue sky. And then we're going to show it land. So it's just a three act story. And then soccer, a ball's this big, which is so amazing. Football, you can see basketball, same thing. So it's difficult to track. I remember when ESPN made their investment in our last round, one thing that came up from former chief or soon to be former chief at Disney was figure out how to track that ball better.
I mean, have there been suggestions to do what hockey very briefly did, if you remember, which was the flame, it wasn't flames, but the tracking of the puck.
Yeah. I remember being sports consumer teenager at the time, hating it. So I'm very allergic to like technology or AR that actually pulls the art form out of the game. I'm also pretty allergic to fundamentalizing a sport. I actually think that fans deep down love that football's complicated. They all think they know it, but like sitting down and listening to John Gruden go through his play calls, I mean, give me a fucking break. but it's amazing. You want to be a part of expertise. You want to be on the outside. You want to be at the big campfire and be like, what's going on here? And then there's actually, people like to be challenged and learn over time. So then they study and become fantasy sports experts, et cetera. But you don't want to dumb down your product. And lacrosse is complex and it doesn't get the credit, certainly the athletes, that it deserves. We have to be fit like a soccer player, physical like a football player, understand two-man game and spacing and picking and rubbing like a basketball player, the hand-eye coordination of a hockey player, and you can't slow down. And it's just, and you're wearing a helmet. And so it's an incredibly difficult sport to play. So it's incumbent on us to actually tell those stories more consistently and perhaps better to new audiences who aren't familiar.
Yeah, and anecdotally, I mean, I think everyone just understands how popular lacrosse at the youth level has become across the country.
Also where a lot of capital is going into youth sports across the board.
Private equity and youth sports. But the challenge for you is obviously at the pro level, that's a lot harder to, appeal to adults who have a billion other things they could watch, not just sports, but really competing with other forms of entertainment too.
Yeah, well, so we have an internal fan study that has 6 archetypes of fans that stretch the household. Because if you think about a household, what makes the NFL so amazing is I had buddies who I went to school with at Hopkins who were from Baltimore who were hardcore New York Giants fans. Why? You were born in Baltimore. Because their dad was from New York. It travels through the house over time, which is amazing. But we talk to our parents through different formats and we talk to their kids and then everyone else in between. So that means you have to be sharp on audio and podcasts. You have to be sharp editorially with your strategy. You have to be sharp across social media. You have to have a film and television strategy. Obviously, the live product, you have a great partner like ESPN. You have a great packager that you produce the games with. But you sort of, which is a real challenge, you sort of have to be everywhere. And a good venture capitalist doesn't like that idea because if you're everywhere, you're nowhere. But if you're gonna pull the value out of the system, and you're with a sports household, the whole family wants to talk about it. So you have to be there in a bespoke way. That's also where AI is helpful, is being able to parse out messages, take email distribution around location, around who the consumer is, depending on how much data you have, who their favorite players are. You do that in app too. So you can channel their specific desires, which arguably makes them a deeper fan, which leads to more economics.
I got one more media question for you, and then I want to zoom out and do some non-PLL. Yeah. But we flicked at this a little bit earlier. There is now a boom in these new short season contained sports models. So we talked about Unrivaled.
Yeah.
We talked about TGL, Simulator Golf League, that's done well. There's you guys, it's 4 months, it's a limited run and it's not such a long, exhausting regular season like these other leagues are dealing with. I mean, NHL, NBA, MLB, I think there's been a lot of fatigue. And you look around and they're all trying to find some new all-star or halfway through the season thing to rehook people and keep them in season cup. Yeah. NHL had a huge hit with 4 Nations, but NHL All-Star had kind of been waning and the Winter Classic can't seem to figure it out. And then add into that all these new leagues that are trying to launch, especially in basketball. Is this where it's all headed? I didn't even mention Athletes Unlimited, right? Which has had some success. Is this the new future? Is like short, contained, it makes it more exciting, limited run, must watch?
No, but it's a very robust question. The NFL is talking about expanding different, so they're sort of like, assume you're not the NFL, but because every game does really feel like it matters there. And what you're talking about is tonnage in the NBA and the NHL and Major League Baseball. And like on the edges, they'll be addressed and the commissioners in front office look at all that. But in the end, tonnage is what sells beer at baseball games and what sells advertising for the NBA, right? Adam Silver got an amazing media rights deal. And with a third of those games, it would have been a lot less. And so some of it is just pure economics. The more tonnage you have, the more attention you can gather, and the better the economics.
If the appetite is there for that many games.
If the appetite is there for that many games. But you could talk to, as Doc O'Connor's on our board and Arctos are investors and they have access to the big four leagues. And so I sometimes will sit with, team presidents and talk about their businesses. And, the Golden State Warriors, they have their own fan study and fan archetypes. And they have this sort of this swinging pendulum around who a hardcore or a core fan is, because some of that is just up to the fan. So by way of example, they have interviewed hardcore fans of the Golden State Warriors, self-diagnosed, because they follow Steph Curry and Aisha on Instagram and they watch a game every season.
What? Yeah.
But they'll buy jerseys, and that's often more than someone who watches all of the games and doesn't attend or buy merchandise. So you figure out, economics on a per fan basis with these robust studies. So I answered your point directly. Are these leagues going to shift to more short, high impact? No. And we have to continue to figure out how to keep the beats alive throughout an elongated season. So that's where the mid-season tournaments come in. This has existed in European football for a long time. You can win a treble, and there's like 3 different tournaments happening. You can win more depending on now the FIFA World Cup, Club World Cup, et cetera. But fans have shown us globally that they can keep up. I think the NBA in-season tournament was really strong. We have our championship series, which is similar. It's in our off season, and it's also a different format. It's 6s. It's beginning later this month. You should come. February 27th, exclusively on the ESPN app, down in DC, top 4 PLL, top 4 WLL teams, round robin, and then semifinal and championship on March 7th and 8th. That is an Olympic format. We launched that as a bid to get back into the Olympics, which was successcul. And then the other thing I'll say is, like, emerging leagues or event entities that are trying to capture value, they better have Jake Paul and Mike Tyson. Because it's like, again, on paper, it's interesting to say, hey, we're going to do a 1-week event. And then sponsors will be like, it's not enough. Why March Madness is really exciting? Because it's in March, pre-tax season, covering 30 days. And CMOs look at, can I not only do an effective spend and reach a target consumer, but over a long enough period of time to capture impressions? So they're really sharp on the back end. Giving them a 1 or 2 week property is really tough, unless you're the US Open. But again, now we're talking about established sort of big punch master stuff. And the established, last note I'll give you is boxing. It's always how boxing's been, is like fucked up as it got. And I know Dana and TKO guys are trying to solve for it. I think it's really interesting. So it's a no and yes answer.
When we talk with athletes on this show about their portfolio, so many are invested in either leagues or teams or through a side door. You are no longer actually playing, but you are laser focused on the league. The thing you've created, although that was just part of the Rabil Ventures portfolio like anything else, you are not yet in any kind of team. You haven't personally invested. You've got the venture fund. Right. And a lot of companies in that portfolio I recognize. Sleeper is a great fantasy app. There's Whistle Sports, Friday Beers. Feels like it's suddenly everywhere.
League apps.
There's a lot of good stuff in there. But,
The Athletic.
What I'm getting toward is, when might you want to put some of your money into something in sports in terms of ownership?
Well, I think you're talking about teams.
Yeah. What do you want to be
leagues.
in that you're not in?
Yeah, I've been asked to come in on team and league opportunities, but there's a lot of stuff I do directly connected to PLL and adjacent to PLL. And I, like my brother Mike, who's my co-founder and our CEO, and an extraordinary entrepreneur in his own right, and we sort of divide and conquer across the various business units. We have a fiduciary responsibility to our board and the people who we've raised a lot of money from to be as singularly focused or mission driven as possible. So at this stage, like we do have, the athlete chip on our shoulder. We're in competition with everyone. And I know Roger Goodell and Adam Silver say the same thing. And you have to have that mentality. So, I take my investor hat really seriously. And if I throw that on for another league, I think that would be confusing for our colleagues and for our investors.
Yeah, it's a good answer.
It's true.
Sure
he hasn't challenged me much. That felt like calling bullshit.
Well, I mean, I'm sure people have knocked on your door and been like, "Hey, you can get into this team."
Yeah, and look, I don't have like the deep pockets of what it requires, especially if you're looking at Big Four. But to your point around funds and access to coming in, and people like David Blitzer's an investor in the PLL, and him and Josh Harris, Mark Ein, other small group of folks bought the Washington Commanders. And that's my hometown football team. And I had a lot of conversations with Blitz about that. But, it's also, looking at the investment. And that was also an amazing one at like roughly $6 billion. And they go like, we want to double it. And you go, wow. And like, that was arguably speculative to say when they bought the team. And now you're like, well, that's an easy double. It's crazy the way that, again, AI proof, I think, not just capital coming in. There's a lot of like dissection of media rights growth against GDP historically and the future. And you guys are on that. And it's sort of like, when's the ceiling? Where's the ceiling? When is the ceiling come down on certain leagues and others? So I don't think that's why new capital's coming in, is the expectation that media rights over the next 10 years are going to do what they did over the last 10. But there's other operating business opportunities that make live sports really, really attractive.
What is something in the sports world that we haven't talked about at all that really interests and fascinates you? Either a league, an athlete, what they've done in business.
Oh, in the sports world?
Yeah.
That is interesting to me?
That you watch, keeping close tabs on what happens there.
I love you and all your competitors. Seriously.
So media.
I consume media all the time. Yeah, media marketing and lacrosse come into me at the PLL, and again, we were talking before we started about Netflix, Warner Bros. Discovery, Paramount, Tri-Feud, and just the future of Hollywood. And if you look at the growth of the creator economy, which two of my closest friends, which is why I originally went into Whistle Sports, to your call out, who built the Lacrosse Network, who now we own at the PLL, that's Colin Rosenblum and Samir Chaudhry, who run a big sort of creator network and sort of looked at it as the czars. So I meet with them often. So maybe they might be one of the folks that can help, because what does the creator economy do to the entertainment business, to film and television, to overarching content budgets? Where do sports fill in? Are they a part of Bella's budget in totality, or is there a separate carve out for the live team, which Gabe and Brendan are looking at just referencing Netflix and tying to your short sort of punchy events that they can drive subscriptions and advertising dollars and overall interest.
Alex Honnold, scaling a skyscraper.
I love film. I love cinema. I think that I kind of view us as an indie project going to try to win an Academy Award. We're not going to like blow through the doors of viewership overnight and all of a sudden millions and millions of people are going to watch every game. If anything, the NBA and the NHL and the MLS tell us like they're struggling to get millions and millions of people. Certainly the closest to it is the NBA, but like NHL and MLS are not. Absent the playoffs.
No, I was just going to say that baseball has really come up in the last couple of seasons.
Good point.
There's people who think that baseball's back in the number 2 slot, anecdotally,
it's
arguably,
just hard.
Over basketball.
So the whole system changes. So you have to be like, especially as a founder-run sports league, which is really unique. You have to be on it. And that's hard to do, because what makes founder-led businesses is they're scrappy and they're lean. So where do you find the time to be predicative? That's why you have a great team.
Let's end on advice. Your book.
Yeah.
There's a lot of advice and anecdotes. Yes, I've read your book.
Last night.
Last time I had not read your book.
I called it
Last
out.
time you came in. Listen to the audiobook. But there is a fun one in there about using Buffett and compound interest and applying it to everything, not just finance and investing. I thought that was a good kind of model for relationships, business building, sports. You can apply it to anything.
Yeah. I think sport and business are so analogous, which is why I wrote the book at the time that I did, is that I aggregated. I'm a learner. Like I told you, I love to consume, and I'm really interested in people and how they think and what they know. And I've been mostly groomed by my parents to drop the ego at the door, partially groomed by having learning differences growing up to drop the ego at the door around like how smart am I versus someone else. And I just ferociously love to learn. And I approached it that way, as you probably read in some of the chapters on the sports side. You know, I talk about how Steve Nash advised me how to play at a high level in my 30s. And then my career took a weird turn, and I launched the PLL with my brother and played in it while I was a co-founder. But launching that process gave me the most incredible hands-on experience with investors and other operators. And I started learning more from them. So the book is a welding of the two. And you know, there's a reason why we all use sports isms in the workplace. But things like discipline, or you mentioned, are consistency, work ethic, resilience, persistence. I would say the chapter that's known most in the book is called "You Can't Miss a Day," which is advice I got from a college coach when I was 13, who told me that I would be given a guaranteed spot on a Division I team of my choice with a scholarship if I shot 100 shots a day from then on through my senior year in high school. And that's what I did. And he was right. And I've tried to carry that consistency, and that's sort of what Warren Buffett talks about in business and investing. I would say that there's one difference between sports and business, and I'll reference Michael Jordan and Warren Buffett. And in sports, it's binary. There's one winner. So within the rules of the game, you do everything in your fucking power to win that game. And in business, I find that you have to have multiple winners, especially if you're running a sports league. And what that means is, like, when Lexus comes in as the official auto partner of the PLL and the WL, I want to drive a 4 or 5x return greater than their anticipation to their investment. And I remember Paul Levesque telling me this. Sponsorship is not a game of sum, it's a game of retention. How can you lower your churn? And that means you're being a great partner. So the difference between sport and business, I think, is compromise. In business, you have to let go of what would categorically be a win. It's stupid if Mike and I were to ever walk out of a sponsorship pitch or an investor and be like, we won that.
We got him.
Because guess what? We're going to lose when the term's up. Anyway.
Good deal. Yeah. Good stuff, man. Good stuff. Always great to talk.
Always great to talk.
Thanks, Paul.
You didn't talk much, but yeah.